hope that you guys are feeling amazing today. And my whole goal is to impress you guys. So if you guys leave here impressed today, I'm hoping that I can get a few referrals from you guys. I'll put my best foot forward and I'm going to tell you what I know about this product, and it is unbelievable. Now, I don't know everything about the product, so if you guys have questions that I cannot answer, I will be doing my best to get you guys that answer within 24 hours, okay? Okay, so let's begin. So how do you use your life insurance while you're alive? We're gonna start with the video.
11 years, she just bleeding all the time. Ellie was born in June 2020. Looked like the little angel last year. She had a nosebleed. It's non-stop. That's why we decided to take her to emergency room. Doctor just they concerned about the cancer. I just feel like I think she will be my future. So I'm sorry. It's like no more future. After that, I call Fion.
Hearing my client only 2.5 years old and facing cancer, that is so difficult. I said, Nan, don't worry. I will come as right early in the morning. I believe everyone should know about living benefit. This is life changing.
I just tell my wife, don't worry about financial. We got the money ready. Her treatment is going very well without a policy. I just one income cannot cover all the spend.
Living benefit is there for you. It's not just dying. Living benefit is giving people a second chance to live. It's not only a life insurance, it's a love insurance.
Love insurance. Have you guys ever watched videos like that before? Like with life insurance, or was this your first one? First one. Okay, so I'm gonna go over a few facts. I'm gonna throw a lot at you, but so the average amount of debt that Americans leave behind when they die is $101,915. So without plans to save and invest or plan for your retirement, you have to ask yourself, what kind of legacy am I leaving for my children or for my family? With cancer survivors, so it was 39%, but it bumped up to 44.5%. So 44.5% of men and women will have cancer in their lifetimes. So a lot of the times we'll hear stories of people who survived cancer, but they've lost their home, they're $200,000 or more in debt, and now they're having to deal with this financial burden after they got on cancer. And the number one reason why households file for bankruptcy is medical bills. So an example of this is my Grammy. So she got cancer a couple years ago, and she ended up passing away from it. I think, how long was it? It was like...
It's been a few years. It's been about 5 years, I believe, that she passed. It's one of those things where when you don't plan for being ill, like Grammy, other expense comes up and it really affects your life. And, she was one of those people that lived very free day to day, didn't plan. And her passing was very difficult because she did rely on her family to help and do a lot of things, but she felt very burdened by that. She felt it was very difficult for her because of the non-planning. And it was very difficult for us to watch as a family as well,
And so with her, if she would have had a policy in place, she would have had access to living benefits, so a lump sum of money, and she probably wouldn't have passed away so quickly. She didn't get any treatment either. So with the living benefits, that's the lump sum that she would have used for treatment. So like it says up there, with living benefits, you're protecting your clients from having this happen to them. So the next one, the average monthly Social Security benefit for retired workers in 2023, it's $1,827. And how often have you heard of an elderly parent or grandparent who's too sick to care for themselves? Anybody here?
Well, it happened to me. It happened to me. No, it really did. And you know, it wasn't cancer. And Grammy, you know, she chose to go a different route. She decided she did not want treatment because she didn't want to extend the inevitable. And it was very difficult for her and the family to manage. Had she had this, she would have had more options for herself and for her life, and she wouldn't have had that constant burden. I went through it with my ankle injury, where if I hadn't planned for my future and for the ability to not produce income and work, I would have lost probably everything that I have. I was unable to work. I was unable to do anything. And while this is not life-threatening, it's an example of what she's talking about here. Because yes, these diseases are life-threatening, but something could happen, whether it's life-threatening or not. And in one way or other, you need to prepare. I happen to prepare, you know, I have rental property, I have other income. And so I'm able to go home and not do anything and still have money coming in to live and survive and pay my bills. But if you don't have those things, you have to set yourself up in a certain way, because you never know when it's going to be you. Like we all think, I'm healthy, I'm strong, I'm active, I'm able, you know, I'm all of these things you feel, and then boom, something puts you out and all of a sudden you can't work, you can't produce, you can't do anything, you don't feel well, you're sick, your family is still relying on you. What do? And those are the things that we don't think about, especially being younger. Now, I wish I would have also not just invested in property, but done something like this when I was younger.
Can you guys tell my mom's my biggest supporter?
I didn't mean to be, I'm sorry,
No,
I took over the whole thing, I didn't mean
Yes.
to do that, but I'm very passionate about it because it's very fresh to me. And let me tell you something, when you love what you do and you're used to working, you're used to producing and being in motion, and you're taken out of that overnight, not only is it depressing, not only is it it's very difficult in every manner, and it's like a fear. Like, I can't do anything now. What is going to happen to me and my family? Well, I didn't have that fear because I feel financially secure, but I could imagine if I had that fear going through this, I feel that my recovery would have been a very different outcome. And so we need to plan for these things in one way or another. We need to plan for our lives, and that's what this is about.
Absolutely. And even with this, so this policy allows you to take out the money for whatever reason you want. So you can take out the money at any point. There's no restrictions. And if you can't complete 2 to 6 daily functions, it'll cover for long-term care. So my grandpa, he's in a wheelchair. He cannot, I think he can't bathe, he can't toilet by himself, he can't dress by himself. What else can he do by himself? He can't eat by himself, or no,
he can eat, yes.
But more than 2 of the daily functions, he's not able to complete. We have 2 in-house nurses right now.
3
in-house nurses. Let me tell you, it's expensive. It's very expensive. If we had a policy in place like this, we wouldn't have to be paying out of pocket for his care.
Oh, how I wish we would have done this. Because now, as a result, yes, you get, you know, and elderly parents, they want to stay comfortable. They want to stay in their homes, you know, they want to have the things that they had in life. And you have at-home caregivers around the clock, 3 of them full-time. You're looking at $14,000, $15,000, $16,000 a month in care. And something, you know, like this wouldn't be draining assets had they put something like this into place.
We gotta do a presentation together.
So anyway, I'm sorry.
No,
I have a 12 o'clock recruit, so I'll be out of here, but it's only 11. Sorry, my left one.
So the next one is 56% of Americans, they don't have enough money to retire comfortably. So they're either gonna run out of money, they're gonna have to downsize, they're gonna have to cut costs, or they're gonna have to go back into the workforce. So imagine you're 72, 73 years old, thinking you're gonna retire comfortably, now you gotta go back to work. And an example of this, so I have a client right now, we're getting her an index universal life insurance policy. She has a 401k, she has an IRA, and now she's gonna have a built-in pension plan into her index universal life insurance. So she has supplemental retirement income. The next one, assisted living, we kind of just went over this right now. So the cost of 3 years of assisted living is $365,000. And then per month, assisted living in LA, Riverside, and Orange County area, it's $6,542 per month. I think we might be paying a little bit more, which is
And that is
bizarre,
low.
which is crazy. And then, yeah, my grandpa, a lot of these notes are for me, so I remember. But yeah, with my grandpa, we're paying a lot for his care. And if we had a policy in place, we would not be having to pay out of pocket. The policy would kick on, living benefits would come, and that's the money we'd be using. Okay, I'm gonna play a quick video. This is gonna go over chronic, critical, and terminal illness that is covered in index universal life insurance. And I'm throwing a lot at you, but I'll make it more systematic.
Americans live with at least one chronic disease. A stroke occurs every 40 seconds in the United States. 38.4% of men and women develop cancer in their lifetime. And the number one reason households file for bankruptcy is due to medical bills. I bet you didn't know that, but today I'm going to share with you how to protect yourself or someone you love from the major financial pitfalls that follow these life-threatening events without getting into debt or touching your life savings. As with so here are the 4 different types of living benefits that we can offer you.
These are in the
with
policy.
Number 1, terminal illness. Number 2, chronic illness. Number 3, critical illness. And number 4, critical injury. Terminal illness is included in the majority of life insurance companies. Here's what it means. God forbid, knock on wood, you become terminally ill. Your own doctor says you're going to meet your maker within the next 2 years. And unfortunately, this is a sickness that just cannot be cured. That is terminal illness. They give you a percentage of your death benefit so that you can spend it at your leisure. You can do whatever you want with it. You want to go on vacation? You want to spend it on
So this would have kicked off for my grandma when she had cancer. She would have gotten the terminal illness
That's living
benefit.
benefit number 1. Living benefit number 2 is chronic illness. You can't perform 2 of the 6 activities of daily living without assistance for a certain period of time, such as number 1, bathing yourself. Number 2, continence, being able to control your bowels and your bladder. Number 3, dressing yourself. Number 4, eating, like having to be fed. Number 5, toileting, needing help going in and out of the restroom. Number 6, transferring, needing help getting in and out of the bed or having to use a wheelchair. If you lose 2 of these 6, a chronic living benefit will kick in. Now the third type of living benefit is going to be critical illness. Here are the majors: heart attack, stroke, ALS, cancer, blindness. Some companies have more than 10 critical illness categories, others have less. Lastly, the 4th living benefit is critical injury. If you were to have any of the following life-threatening critical injuries, such as you're in a coma or paralysis, you can't move your body or parts of it, you have severe burns, you're suffering from traumatic brain injury, then a critical living benefit will kick in. When a living benefit kicks in, what's happening is that you're spending down your death benefit without having to die to use it. So these living benefits are offered in a term policy or a permanent policy. The only difference is that a term is temporary and a permanent is permanent. If you had a heart attack or stroke or cancer, I just described to you that people are living from it, but they're going broke from it. If something like this would happen to you tomorrow, what would be your plan? If I can show you some.
Okay, so living benefits, again, they're in term and permanent. Today, we're just talking about permanent life insurance or index universal life insurance, but they are in term as well. And another question to ask yourself or your clients if they say that they do have a policy in place is asking them, okay, do you guys have the old type of life insurance or the new type of life insurance? Because the old type of life insurance, it does not have living benefits. The new type does. So with you can check into yours and see if yours has living benefits. Let's see. Get to the next. Okay, so what is IUL? So Index Universal Life Insurance is a type of life insurance policy that combines the traditional universal life insurance with the potential for cash value growth. Now, this is linked to a stock market index. That's where the indexing comes from. It participates in the rise of the stock market, but it does not participate in the fall. So there's a zero floor. So you're putting your money into this policy. It's growing around 5 to 8%, which is conservative. And anytime there's a fall in the stock market, you get a zero floor. You're not losing your money. And you don't have to choose the S&P 500. You can choose any index you want. That's just the most popular one that people go with. So key features of IUL. So everything that we just talked about, all the facts, this is going to kind of make sense of it and list it out. So the first one, flexible premium. So you're able to adjust your premium payments month by month if you wanted to. So let's say that 1 year you're doing amazing, you're making a lot of money, you can pour more into the policy. You can have your cash value grow. Let's say you're not doing too well, you're having a rough year, you can pay less into the policy, you can lower the premium. So that's flexible premiums. The second one is cash value growth and downside protection. So it's linked to an index. So like I said, participates in the rises, but does not participate in the falls. There's a floor. And I said 5 to 8%, but people are getting 10%, 12%, sometimes 15% in their Index Universal Life Insurance policy, risk-free. Death benefit. So this is financial protection for your beneficiaries. So what the death benefit is, this is what most people know life insurance for. So if you pass away prematurely, your beneficiary, let's say, I'll talk about my mom's policy. So my mom has a policy, I think it's a couple million. She's an expensive woman. And
I just wanted to make sure that if something happens to me, each one has time, because, to not have to sell off properties or assets or businesses, and to be able to like pause, relax, have money, and then sustain and, kind of get a grip on everything. It gives a breather.
Exactly. That's exactly what the death benefit is.
I see.
So the death benefit, it will go to me and Alexa.
It's weird talking about that. I'm right here.
So I'll get that death benefit. It's gonna help me with debt. It's gonna help me with burial costs, funeral costs, knock on wood. I know it's a little weird to talk about, but and then
it's okay, it's for a good purpose.
It's for a good purpose.
It's a sample.
It is. It's case scenario. And then it's gonna give me time to mourn. So I'm not gonna wanna go back to work. I want my space to breathe in peace and to take that time for myself. So that's what the death benefit is for. And again, you can make the death benefit as much as you want. You can make it 500,000, you can make it $1 million, 2 million, 3 million, whatever you're willing to invest. And then living benefits. So we just watched a couple of videos on that. So this is an acceleration of your death benefit if you're to come down with a qualifying chronic, critical, and terminal illness. And if you can't complete 2 of the 6 functions of daily living, that's when the benefit comes on as well for long-term care. So any questions about living benefits?
When do they, let's say you got a policy today. Is there a certain period of time that you have to have the policy before you can gain the benefits? Like, let's say something happens to me in a week. Are the benefits full benefits or?
Full benefits with the living benefits, it depends on the severity as well. So what the carrier will do is they're gonna get like a medical exam, or they're gonna get something from a doctor to see the severity of what you have, and then based on that, that's the amount that you're gonna get.
And is there blood, like I know with life insurance policies, you have to take a blood test and things of that nature for the living benefit policy as well?
Yeah, great question. So yeah, some are non-medical exams. Like if you don't have good health and you just need like a quick policy, you can get one without a medical exam. That's a great question. Okay. Any other questions?
I had a question about the floor.
Yes.
So my mind's working like stocks, right? So of course we benefit from the increase, like you said, the 0% floor. So are we basing it on the base of what I put in, or are we basing it off, say for instance, I have 5,000 and the market went up, now I'm at 8,000, right? Now the market went down, so where is my floor? Is it what I put in, or is it where I'm at?
Where you're at.
So
That's a great question.
so if the market goes down, I'm gonna keep the 8,000 and it's not gonna go down. I'm gonna keep what I earned and
Absolutely.
gained.
Yes.
Okay.
Exactly.
Yeah.
So it's like, imagine it like,
Just keep
rise, yep.
Yeah.
Floor, rise,
Okay.
floor.
Yeah.
So, awesome question. Any other questions? Living benefits loan options. So this is access to your cash value. So policyholders can borrow against cash value at any time. Now, this is a long-term vehicle. So what I would suggest is to pour into this policy and maybe don't take out for a couple years, give it time to grow, give it time to compound, then take loans against it. So it's tax-free, tax deferred, which is amazing. And I would advise to use it for investing and not vacations. So use it as a tool to buy houses, to invest in property, to make good business decisions. You can use it for a vacation, but it's best to use it for something that's gonna get you a return. Number 6, tax advantage growth. So tax benefits. So your cash value grows on a tax deferred basis, and withdrawals or loans against the cash value can be tax-free, provided the policy remains in force. So we tell our clients to only take out 80 to 90% of the cash value at a single time, just so the policy is still in effect and that the taxes won't be turned on.
I have a question.
Yes.
So for the loan option, is there a interest that they have to pay back when they pay it back?
That's a good question. Yes, there is. So there's gonna be around 2 to 4 interests, but you're also gaining on the policy as well, so it cancels out. Like a wash loan. I think that's what it's called, right? A wash. I've heard that somewhere.
Yeah.
I'm young, but I've heard it.
Who can get an IUL? Anybody can get that?
Anybody can get, it gets a little tricky when you get older. I'd say past 65, it's a little bit harder. But anybody, yes. Great question.
And one last question. If you have an older policy, can that be included, or do you have to start from zero?
Like
Like
you
an
can roll
older-
it over.
You can?
Yes, that's a good question. Yeah, you can roll it over. It does depend on the carrier though. So we can look at yours. You said it was American National?
Mhm.
Okay, how many years have you been paying into it?
Over 10?
Over 10 years. Do you know if there's a convertible option?
I'm not sure. I
Okay,
haven't used it.
okay, we'll look at it.
And then one more question, so we mentioned age, so the premium's gonna be based on your health record, right? Medical exam, because you said you can have a medical exam, or you don't need a medical exam. So how are the premiums based on that? On your age and also your health, if there's any?
Yeah, your age, your health. Also, we can design one for you. So let's say you have, I'll give a couple examples. Let's say you have a mortgage that's $500,000 and you want to have a policy, a term policy that's for 30 years, and that will give your beneficiary $500,000 to help pay off the mortgage so they can stay in the house. So that will be the death benefit. Your monthly amount is going to depend on your health. So if you're very healthy, you're probably going to be paying like $70 a month. If you're not too healthy, it's going to bump up a little bit more to like
Regardless
100.
of my age, like I could be
And the
50, 60 and be healthy.
So for 30-year-old, so the example I gave was for 30-year-old. For 60-year-old, it's probably going to be even more than that. So yeah, your premium is going to depend on your age, your health. Those are the two main things. If you're taking prescriptions, stuff like that, it will bump up. With IUL though, this is more for building your cash value. So you can also just choose the premium you want as well. So if you want to put $500 into it, we can start your IUL at $500.
It's an investment.
And then what does change though for the age and health is the cost inside it, the fees inside it. So the fees rise depending on your health situation. Does that make sense?
Yeah, makes sense.
Okay,
Yeah,
I'm learning. I'm learning.
I have one. I remember when my husband and I at the time took it because he was borderline high blood pressure, or not even high blood, cholesterol. It was when, those cholesterol, very little, he didn't even have it. That made a big difference in the premium. And, we were back in our, I think, 25, 30 years old. So I was like, yes, I get the $1 million. And he got, I think, like 250 because there was, but I mean, we're talking in our 30s, And I was like happy because I got the $1 million policy and he got like something, but I knew just something simple like that. I still have it, by the way. But something simple like that, just like, so I was just wondering about the premiums, because I'm in a different place now, so.
Yeah, depends on a lot of factors,
Yeah.
mainly the age and the health, for sure.
Any questions? So talking about IUL, what is the interest rate that it will?
Historically, it's gonna average around 6%.
6%,
6%, like that's the interest you're gonna get.
6%?
Yes.
Oh, okay.
That's average though, so you can get more in a year, you can get less, and that's conservative. But I would say 6%, just to give you a number.
Okay.
Yeah, the one thing that I wanted to say, like just based on the example that I did, and with Jennifer voiced, I got my life insurance when I was, young. And I would just want to recommend, I know most of you are probably younger than me here, I would highly recommend you get it right now because it makes a huge, huge difference of the policy you can get. And even if it's just a tiny little one, I mean, I'm so glad I did it back then. It was one of those things like, yeah, it sounds good, but now that I'm a lot, wiser, I'm so glad that I got it, because it just makes a world of a difference. So if you can, if you're in your 20s or 30s, or whatever, I mean, the younger you are, the better the
The
policy.
easier it is,
Yeah, the
yeah.
easier, just like do it.
The
even
lower
if it's-
premium you have to
Yeah.
pay. So,
It makes a huge difference.
for kids, it's the best investment tool. So if Justin has one for his kid. He pays, I think, $50 a month, and by the time his kid is 65, she's gonna be a millionaire. So, millionaire baby. Okay. What time is it?
Well, now you need to do a real millionaire thing.
Yeah. All right, I'm gonna show you guys an illustration. If I can get this to work for me. Okay. Yay. Okay. So this carrier, National Life Group, this is the main one that I work with. They're amazing. Oh, this is weird. Okay, so for this quote, I did $200 a month for a 35-year-old female. So I focus more on cash value growth. So Index Universal Life, that's mainly what it's for. So her death benefit, it's not as much, it's still a good amount. So her death benefit, if she dies tomorrow, $134,000 or almost $135,000. So live too long. If she needs cash, her retirement plan at age 69, she's gonna have $242,000 to tap into. If she lets it sit at 74, she's gonna have $341,000 to tap into. And then if she lets it sit even more, 79, $482,000. Now, if she becomes ill, she can access a portion of her death benefit. So this is the living benefits. This is also in the brochure that I handed you guys. So her terminal illness benefit, a lump sum of $273,000. Chronic illness benefit, almost $5,000 per month. And then same thing with critical illness, critical injury benefit, a $256,000 lump sum. And they just added Alzheimer's disease in recently, so that's another one, it's a good one. That's $245,000 lump sum. So with this policy, Index Universal Life Insurance, there's 3 aspects to it. So, and just to reiterate, because I already went over this, but there's die too soon, so an income tax-free death benefit that goes to your beneficiary for burial expenses, debt, college, for me to mourn for my mom. And then live too long, this is tax deferred build up policy cash value. So this can supplement your retirement income or just meet emergencies or opportunities. And then the third one is the become ill. So this is for terminal, chronic, critical illness, and critical injury. I think I got that right. All right, let me move down to the illustration. I don't want to bore you guys. Let's see. Are you guys following so far?
Mhm.
Okay. Any questions? Let's see. All right. Oh, I don't like how it does that. Okay. Oh, that's not pretty. Can you guys see it like this?
Okay.
Yeah?
Yeah.
Okay. Okay. So this is the policy year. This is her age, 35. She's putting $200 a month in, so $2,400 per year. Now this side right here has a 3% interest rate. That's a fixed account. This is the index account, 6.44% interest rate. So this is what you were asking about, the return that you're gonna get.
Yes.
Her death benefit is 136, but it does grow throughout the years. So let's say year 10, she's put in $24,000 of premium. She's hit her mark, a little bit over. So she's put her money in and she's made back the investment. Her death benefit is $159,000. Where it really starts to get beautiful and lovely is year 20. She's put in $48,000 of premium. She now has $75,000 to tap into, income tax free. Okay, her death benefit is $209,000. And then where it gets spicy is, okay, year 65, $72,000 of premium, okay? Her accumulated value in this policy is $181,000 for retirement. So she can use this as her retirement plan. She has $181,000 additional. Her death benefit is $316,000. So if she passes away, her son, her daughter, is gonna get $316,000. And it keeps on growing. So if she doesn't take out at 65, she takes out at 74. She's paid $96,000. She has $341,000 to tap into, income tax free. Her death benefit, $454,000.
So the 454 though, if she took out the 300,000 would come from that, so it would be less that amount, correct?
Yes, exactly. So if she doesn't want to do that, she doesn't want to take out, she wants to leave this as her legacy for her kids, then it would just be the death benefit right there. So it depends, how you want to use it, or how to set up.
Yeah.
It depends how you want to use it, basically. All right, let's get back. That was easy to follow, right?
Mhm.
Okay. Are there any questions so far? Like I said, if I don't know the answer, I will get back to you. Any questions?
I think it's great because you could use it as an investment tool, like you said, and also it's protecting you. So you have the best of three worlds actually, injury, investing, and death,
Mhm.
which is great.
And it's much better than putting money in a bank. Well, the
Yeah.
bank is the last place you should have any money anyway.
Exactly.
Exactly. So what, like you just said, what savings vehicle would you
Right.
choose? So would you do the bank, or you
No.
get 0% return? There's no living benefits, no death benefit. Or
Yeah,
are you gonna choose IUL, where you're getting a return, 5-8% conservative? You get living benefits and you get a death benefit. So which one are you gonna choose?
think about it. I wish I would have known that years ago.
My hybrid. Okay, we're getting close to finishing. So This is the US debt clock. Oh no.
The US national debt. I wonder what that.
Okay. So where are we at right now with US national debt?
Definitely under.
Definitely under. Can you guys see it?
Yeah.
35 trillion?
Yeah.
We're at 35 trillion and it's going up.
Isn't that horrible?
We never stopped,
It is, right, when you think about it.
we never stopped since the depression. It's always been there.
Okay, so base, hold on. So based on the US debt clock, are taxes going up a little bit or are they gonna go up a lot? A lot, right? Okay, so do you want a vehicle that saves your money income tax free that you can take out whenever you want? Or do you want to save, take the chance and leave your savings in a 401k where you will be taxed later and you will be required to withdraw? Also, are your clients worried about a financial crisis going on in the world? Are you guys worried? No.
I mean, we're there. I don't think we're there.
We're living in it.
We're all thinking about ourselves.
So the bank can lend your money out up to 9 times. The life insurance company, they cannot. So for every dollar you deposit into the bank or into life insurance, they need $4 backing it. And most of the companies, they've been in business for over 200 years. So your money's safe with the life insurance companies. Okay, and then this is kind of just to show like I don't only do IUL, I do term, I do whole life, I do GUL, I do living trusts, I do everything so that IUL might not be for everybody. It might not be for the client who has a very low discretionary income. They just want term policy just to cover the mortgage. But I offer different things as well. So I tailor my plans to every agent or every client.
Yeah.
And we finished.
I have a question for you, Brooke, and I don't know, maybe I know but I just want to ask this out loud, so for information. So if you have a 401k, are you, and I know you probably have to check 401k, can you roll that over to one of these?
You can roll it over to an annuity.
To an annuity?
Yes. Yeah. Not one of these though, because that is, I gotta check, that's qualified money or non-qualified money. But you can't roll over qualified money into a non-qualified money account. So no, you can't put a 401k into this.
How about a Roth IRA?
I will have to check with that.
Okay.
I have a question. Do you have to pay this for your entire life, or can you tailor it to a certain number of years?
You can tailor it to a certain number of years. Great question.
Yeah, I bet a lot of people use it for investment purpose, exactly. Yeah, with a time limit. I would imagine. I mean, I don't know very much about this at all. I'm learning. I wish I would have known. I wish I would have known about this and real estate investing combined.
Yeah.
Because then you can invest in property, real estate, get your appreciation, and then you can place your money in the appropriate location as well.
Has that product been around for a long time?
Yeah, I was gonna say, I think
Yeah.
it's just,
Like you were saying when you were looking for life insurance with you and your husband, your 30s.
oh yeah, they
They
didn't
have
have
that
this.
product,
I
right?
know. Well, it wasn't offered to us, and I don't believe they have, because I know we looked into several things. We were doing like everything.
I never.
Yeah, we're like.
Created in the 1980s.
1980s, yeah.
It's a good
Quick
question.
answer.
Let me see.
Almost got you.
Like, Thank you. That's great.
Any other questions?
No. I think I'll look at my policy if we could roll it over to that. I really like it.
Okay.
Yeah.
So to enter a raffle for a free gift, which is either gonna be a gas card, so to drive your clients around to the listing appointments, or it's gonna be a dinner for two at a nice restaurant. You can text that number, your first and last name, and your email. So if you want a chance to win a free gas card or a free dinner,
Something.
I think I'll try my luck. I don't usually participate, but I think I will.
Watch you be the one that wins.
and then if you're interested in IUL and this product, if I sold you guys, go ahead and text IUL. We can get you guys a quote. Okay. And the last thing, so we are having a dinner seminar September 10th at the Coco Palm.
Woo! I love their food.
Yummy food. I picked out the plates myself, and it's gonna be delicious. It's gonna be real estate meets retirement planning. So we're gonna have Sean Brunsky call. We're gonna have Jen Lucero.
Yay, Jen!
We're gonna talk about, should I sell my home now? Should I buy my home now? Do I need a living trust? Things like that. So this is September 10th. You guys can register and come. It's gonna be $80 a plate. I highly recommend you come or this is Law's idea, but you can go ahead and buy a plate for one of your clients as a closing gift. So you can send them to dinner with yummy food and then also with some information, and they're gonna remember you. So $80 a plate. Go ahead and scan that code to register. I can make it bigger. And it's also on my Instagram as well.
When is this again? What day?
September 10th at 7:00.
Come on, Tanya.
I won't
It's
be
pre,
there.
oh, you know. You're gonna miss the festivities.
The party.
Yes,
Yes. And then with the flyers, I would definitely look through them if you're interested. So it has living benefits that I talked about, tax-free retirement strategy, and then of course I have my flyers too with my QR code and all my information if you want to reach me. So, thank you.
Thank you.